In today's episodes, we're going to talk about receivables and how to handle just basic receivable problems and adventures.
Welcome to this episode of Accounting for Small Business with business accountant Georgie Klein.
As we talked in previous episodes, the most important part of your business is your income side of your business and keeping track of that side. Well, an offshoot of your income is your receivables, because most businesses have receivables. Now, if you're 100% cash business, I understand you won't have receivables, and you're very fortunate you don't have to deal with this part of your business. But let's go some basic information about receivables. First, a little bit of tips. First, you should always keep track of what your receivables are. Keep some kind of list so you know exactly who you've billed out on an invoice. And then second, you should really keep track of your deposits, by whom you receive them, so that you know exactly if you have a receivable out there, if you receive that receivable. So your deposits should also be listed by client name, so you can match up your income and your receivables and your deposits all up, so you know in the end who owes you money. Your receivables should be kept track of at least on a spreadsheet or some kind of accounting software. And you should set some parameters so you know that they are 30, 60, 90, and 120 days old or over. So you can set some milestones and some target dates so that you know exactly where along that timeline them receivables are. So let's say your first timeline is at 45 days, and if you haven't collected something, you should at least make a second notice, a phone call, or some kind of email. And you should track these so you know exactly when you're collecting. And some clients, you'll know that they're 30 days, but generally you should know. Now, if an invoice lands at the 120-day mark, then you know you have a little bit more of a problem, and you should really do some targeting letters. The letter that you should do, and I've always used in the past, is a very gentle one. Just saying, oh, if you've paid this invoice, thank you. But if you haven't, will you please, process it with your normal group of business? Or if you have a question, please call me. Now, if that still doesn't get you the money, then you're going to have to make some hard decisions. If you're going to discount that receivable or just write it off. And that items you really don't want to deal with. So that's why it's important to keep track of your receivables and know when they hit the 30 or the 35 or 40-day mark. I just don't want you to become one of them clients that say, oh, I have these receivables and I don't know who paid them. Or I have these deposits and I forget, oh, I didn't write down who that deposit's from, so I can't make it up to the receivables. Or just a client that totally lets your receivables get totally out of control, and you're going to have to make a decision just to write everything off and start fresh. But the receivables are important, and you must keep track of them. It's very, very key because it does tie into your income, and that is the most important part of your business. As in previous episodes, thank you for watching. You can find me on LinkedIn and on my website and Facebook. So thank you very much.
Thank you for watching this episode of Accounting for Small Business with Georgie Klein. For more great information, visit her website at bizbygeorgie.com. Also browse the other shows found right here at Columbus Biz TV Shows.